What is happening in the UK economy and how is it impacting football? Stick around as we find out. In September, it was announced in the mini budget that there'll be some serious changes to the UK tax system. This would have had a significant impact across the whole economy, including that of football. It's now been announced that the most significant change of all, the abolition of the 45% tax rate, would be reversed. Let's use football as an example to see what that one change would have had on the UK Treasury. It's public knowledge that the average Premier League salary for a first team player is just over £3 million. For those that don't know, anybody earning more than £150,000 would pay tax through the PAYE or pay-as-you-earn system at a rate of 45%. In September, it was proposed to abolish that rate altogether, which would mean anybody earning that amount of money, including footballers, would now pay tax at a rate of 40% rather than at 45%. That particular change was not going to be effective until the following tax year. And now the government has made a U-turn on that particular proposal. Why is that? Well, let's take football as an example, which is an unusual business. It's unusual in the sense that its employees get paid more than the people who run the business, the directors, the people who are charged with governance, the people who take on the responsibility of the longevity of the business. Footballers have a shelf life which is relatively short, which is partly the reason why they can demand such high salaries to begin with. But directors and those charged with governance, especially in other industries, tend to be incentivized by long-term incentive plans that would encourage them to grow the business in a safe and secure manner whilst taking some risks that may be rewarded. A lot of these schemes are tax efficient, which means that if the executives or directors pull off the long-term strategy, they would be rewarded with a tax efficient bonus, if you like. It's generally linked to the value of the business and the growth that has been generated by the people in charge. Football's different in that the people on the pitch get paid more than the people off it. In this respect, footballers are employees, which means that they're subject to pay as you earn, just like you and me. That means that they'll effectively be paying tax on the first level of earnings at 20%, thereafter at 40%, up to £150,000 a year, and at this point in time, in this tax year, they'll be paying 45% for every pound in excess of £150,000 a year. Let's face it, the vast majority of Premier League players will earn more than that. But let's bring this to life. On an average salary of £3 million a year, the proposed changes by Kwasi Kwarteng would have increased the net take-home pay of any Premier League football player by over £2,700 every week. That equates to an increase in net pay on an annual basis of over £144,000. That's the increase over and above what they were already paid on a net basis. But that's just the average. What about the top earning players? Cristiano Ronaldo, for example. Let's make an assumption that he's still playing with Manchester United in the next tax year. What would have been the impact on his salary if the changes were to have remained in place? Well, based on his salary, and you can roughly work this out for yourself based on what's publicly available, take 5% of the excess of his salary over and above £150,000, and you can quickly work out that he would be better off to the tune of £1.3 million on an annual basis, which works out to be over £25,000 a week better off on a net basis. The top 10 players earn on average more than £18 million a year. The proposed abolition of the 45% tax rate would have given each of these players, on average, an increase in their net pay of almost £1 million a year. That equates to an amount in excess of £18,000 on a weekly basis. Again, that's just the pay rise. In total, if we look at just the first team squads, 20 teams, 25 players in each team, the UK Treasury would have lost out over £72 million from the Premier League alone. And that's not including the academy players, any women's players, or any league below the Premier League. And that's a significant figure. So that may go some way in explaining why the government has already done a U-turn on this particular proposal. So we ask the question, why is the government taking such drastic action? Well, the UK economy has suffered from inflation, significant inflation into double digits, which means the price of goods has increased. So a variety of measures have been proposed to try to bring inflation back down to a more manageable level of around about 2 or 3%. At the same time, interest rates have gone up. But what does this mean for football? Prior to the announcement of the U-turn on the 45% tax rate, players would have been much better off. Now, they're not. But what else is going on in the UK economy which might impact players and clubs? The pound value has dropped. And that means that players coming into the UK to play football, who will be paid in sterling, would see a reduction in the value of what that could buy them abroad, which may be where they primarily want to spend their money. This may have an impact on attracting talent into the UK. The U-turn on the 45% tax rate might adjust the markets and help improve the strength of the pound. Higher interest rates mean an increase in the cost of borrowing. Debt is a dirty word in football, although in any other industry it's welcome as a means to be able to finance the growth of a business. Where football clubs have taken on debt, which is a substantial number of them, where the interest rate is variable or floating, the increase in the rate will have a detrimental impact on their cash position and the interest charged to the profit and loss account, and ultimately will end up in the financial fair play submission, whether that's profitability and sustainability in the Premier League or UEFA's financial sustainability regulations as they're now known. Financing costs will be captured as part of that calculation. And as interest rates rise, so will the losses that are captured in that bracket, or a reduction in profits will be seen. The fall in value in the pound, in particular against the dollar, may attract more investment from the US. We have already seen a substantial number of investors interested in European football, in particular the Premier League. And as the pound drops in value, the US dollar is worth more, and therefore it is cheaper to a US investor to be able to invest in UK businesses. But what will the impact be to the clubs on the ground? Surely it has no impact, because UK businesses don't care about overseas rates. Well, that's not going to be correct. A lot of the top clubs will have interests in other currencies. We're seeing multi-club models becoming more common. We're also seeing deals being done in other currencies, whether that's deals for shares being acquired or commercial deals for sponsorship. And it's part of the negotiation from both parties to express an interest in the currency of the deal. Premier League football clubs will have a functional currency of sterling. And that means that the predominant currency in which they do business is pound sterling. All other currency fluctuations against that sterling currency will have an impact on clubs. It will have an impact on the cash flow, which means more or less cash may leave the business depending on the rate at the time, unless the club is hedged. And it will also impact the profit and loss with volatility in the foreign exchange gain or loss. Again, this will have a knock-on impact into the financial fair play submission. So what are some examples of foreign currencies and how would they impact the club? We've just mentioned shares and we've mentioned commercial deals from partnerships. And they would be subject to any FX fluctuations, which would impact the amount payable or receivable and also the profit and loss charge. British clubs competing in European competitions will also be generating revenue in euros. That means that the amount of revenue brought in from European competitions will be reduced if the pound was to stay at a low value. Equally, the amount of cash coming in when those euros are received from a sterling perspective will be lower if the pound remains weak. The UK government will continue to come up with measures to help the UK economy. Football is unlikely to be at the top of the agenda, but we will use it as an example to try to explain to you what is going on in the economy. One particular area that the clubs will benefit from is the reversal in the increase of national insurance. The employer's national insurance rate will reverse back to 13.8% from the 6th of November. And you may think that that has no impact, but again, it could be significant, depending on the wage bill of the club. Using the average salary of just over £3 million once again, on average, the club will save just less than £1 million per annum based on this tax adjustment. The larger clubs, such as Manchester United with a pay bill of over £338 million as per their previous annual report, will save well in excess of £4 million per year. Manchester City, similarly, with a pay bill of £310 million a year in their prior annual report, would save approximately £3.8 million as a result of this adjustment. These numbers are significant, both from a cash perspective and from an FFP submission point of view. So that will come as welcome relief, especially to the top clubs. The full impact of the suggested reversal of the abolition of the 45% tax rate is yet to be seen. But as things unfold over the coming weeks and months, the markets will adjust and things will settle down. Or at least that's the hope. We'll continue to keep you up to date as much as we can. If you like the video, please hit like. And for more, hit subscribe. My name's Neil Wood and I'm a football finance professional.